Yeah, cool. It's Jesper Drescher here. Got a bunch of investments. One of them is the company named Beauty Click. Another one is Medundo, sitting on the board of Sky Garden in Africa as well, and got another portfolio of around 25 investments in Africa.
This is Diversified Game.
A podcast giving entrepreneurial advice from a diverse and inclusive perspective with Kellen.
He may agree, he may oppose, and it's more than just race, it's about, ideas.
So, let the game begin.
Hey, it's Kellen, and today on Diversified Game, I have Jesper here, and he is a serial investor, entrepreneur. He builds things up, exits, teaches other people how to exit, and he's doing a lot of investment in Africa. And I saw him on How We Made It in Africa. He was talking about one of his many projects, Beauty Click, and I said we have to get the game if he would be so kind. So welcome to the show. How are you doing?
Good, thanks. And thanks for taking the time. Thanks for inviting me.
Well, you have like a wealth of knowledge, and I haven't seen a book yet. So I said I have to ask all the questions that the other interviews I've seen you do have not. But, I know Beauty Click is one of many things, but can you just take us into your mind on when you see an opportunity, how you see an opportunity, and how do you know when to leave and sell a company?
Yeah, that's a lot of questions at one point in time. But I think the most important thing is, identifying the good opportunities, then develop them, and then, as you mentioned, know when to exit. To identify good opportunity, to me, especially when we look at Africa, it's a lot about the team and a lot about the business opportunity. When I mean the business opportunity, especially looking at what is the market segment here, actually. You can't just replicate things from the West. You need to be realistic about the customer segmentation is totally different in many other countries across Africa. So spend a lot of time on actually looking at the total addressable market, that combined with the team. And then, of course, depending on the stage of the company, we can see is the product market fit like you do in the Western part of the world as well. But if it's very, very early, it's hard to assess. If it's a bit later, that means much more than the team, not more than early stage. On when to exit a company, that's a very good question. I don't think there's a correct answer to that. It's exits can be a lot of things. It can be a trade sale where you sell the whole company. It can be you just selling secondary shares and the company continues independently. It can be doing an IPO. It can be a lot of things. But I think the most important thing is to see, okay, when are you the best owner? Are you the right person to develop the company as an owner? And maybe you're just one of many owners. So could the other guys still run it? Would it be better to have a VC fund in to run the company? Would it be better to have a strategic buyer to run the company and assess those kind of things?
And when doing, starting a company, here in America, I mean, entrepreneurship, it's exploded. Everybody watches Shark Tank and says, wait, I can do this with somebody else's money. And so and people try to do a lot of things with other people's money. Sometimes they do a great job, but how do you tackle, being an investor, when you start a company, are you also going after and saying, I have my partners, my friends, and we can, do this together? Or do you just bootstrap, most of the projects you do?
Yeah, I think in theory, the funding journey is not that different. Whether you do a venture in Africa, you do it in Silicon Valley. In theory, you go through the same steps, start with friends, family, fools. Then you move into find a business angel. Then you move into a pre-seed, seed, Series A, Series B. Well, the major difference is really the availability of money and the African ecosystem. Africa is a lot of countries, so it's not fair just to make a general statement. But in some places, over the last 5 years, early stage funding has developed a lot. So now I would say up to tickets around $500,000 are fairly available. Whereas there's really a gap between, I'll say, in the tech space, $1 to $10 million. When you get above that, then again, there's a lot of impact money floating in and competition about those tickets. So again, that funding game is okay as well. But there's a gap that you need to be realistic around. So I think it's hard to generalize. I'd probably try and push the companies a bit longer with my own money than I would have done if I was in Silicon Valley. Simply because of the valuation you get in the very early stage. Funding game is a bit harder, a bit tricky, and there's less money.
What are your thoughts on, I have people who say, Kellen, we want you to be part of this company because we think we can raise more money if we, have a company in the West, have Western partners. Have you found that to be true?
It really depends on what would Kellen's role be. But there's clearly, I think one thing to be realistic about is that fundraising is quite a lot about trust. People, first-time founders, just per definition, have a harder time finding money and raising money than the second-time founders or multi-time founders that has done successes, because it's trust. And because there is just more money in the Western part of the world, then if you find some people that have made successes, that have their network, etc., then it's also easier to fundraise in the Western part of the world. So I think if you look at African ventures, those that have raised a lot of money in US, for instance, it's because they might have had a co-founder or two co-founders, maybe started the company in the US and then moved into Africa or ran the tech out of the US and then have the operation in Africa. Then there's a link, and then you're tapping into the funding game there as well. Whereas if the company is grown out of, let's say, Kenya, it's harder to go overseas and fundraise unless you have some spike, which could be co-founders.
Folks, you can kind of see that it can pay to have a Western partner. Do you think, though, is it ever disingenuous where, you see people go grab somebody from the West just so they can say we're established there, but pretty much all the work is being done on the continent?
I don't know. I haven't seen that kind of cases. I'm not sure how much that would help. You can't really just put it like that, because you have founders, then you have late stage founders, then you have angel investors, and there's no doubt. For instance, if I go in invest early stage in a company, then it's easier for me to go back to Europe and fundraise because I put money in myself. I'll probably follow into the next round as well, and the reason people will invest because they trust that I'm doing something that's okay, and I made some successes before and I put my own money there, and they don't really question mark, okay, where are the jobs done? Is it done in Africa or in Europe? So I think, whereas if we start a company from scratch, I don't think I would be much use if I was a co-founder just sitting in Denmark. But if I'm commuting in and out, being on the continent every second week, it's a different game than actually taking part of it. So I think most people would actually see it as an advantage that the full operation runs in Africa. But I think it comes back to the trust game again. I mean, when people know some people, it's easier to gain their trust. It's easier to get the investment. It's not that much different than if, I'm based in Denmark at the moment. If I went to Silicon Valley and want to fundraise, it would be hard for me unless I put my operation there or I knew a bunch of people. Whereas in Europe, I know more people. If you came to Denmark, you would have a hard time fundraising as well. Whereas if you do it in your garden in Silicon Valley, people know you've done your successes there. It's be easier.
You have, tech is a big part of your life. How do you go from tech to beauty? Like, how did you even find that angle? Did you, was it one of those things where you saw it written on a pad, the beauty industry, and you said, you know what, I'm just going to go geek out, study all of what I need to know. But beauty, especially in Africa, like, how did that just click for you? Yeah,
it's obvious, isn't it? No, it actually started in a different way. I started doing tech investments in Africa in 13, 14. And then when we got to 15, 16, I thought the market